If you want to build a habit that could make you millions, it's not about perfecting your trading strategy or relying on the latest tools. It's about mastering a mental state that allows you to follow through with your plan without hesitation, no matter the circumstances. This ability to execute your plan consistently, without second-guessing, is what separates successful traders from those who constantly fall short. Mark Douglas, the renowned trading psychologist, understood this better than anyone. He knew that the real battle in trading wasn't about controlling the market or predicting its moves. It was about mastering the mind. For Mark, the essence of success in trading was built on one thing: discipline. But not the kind of discipline most traders think about. It's not about forcing yourself to follow rules or suppressing emotions. It's about developing the mental framework that allows you to act decisively and consistently, no matter the market's unpredictability. Douglas believed that discipline is a state of mind, not an external force you impose on yourself. It's a natural alignment between your beliefs, your actions, and the market's inherent randomness. Most traders struggle because they see discipline as a rigid set of rules they must follow. They try to control their impulses, suppress their emotions, and fight their instincts. But Douglas taught that true discipline isn't about control, it's about trust. Trust in your process, trust in your plan, and ultimately trust in yourself. To follow through with a plan in the midst of uncertainty, a trader must first trust the process. The market will always throw surprises, uncertainty, and volatility your way. But the key is to stay true to your plan, no matter how the market moves. This is where many traders falter. They have a plan, they know what they should do, but when the pressure is on, they hesitate, second-guess, and ultimately break their own rules. Mark Douglas emphasized that the gap isn't between you and the market. The gap is between intention and execution. A successful trader doesn't need to predict the market perfectly or make every trade a winner. What matters most is the ability to act with confidence and follow the plan without hesitation. And this comes not from sheer willpower, but from understanding how your mind reacts to uncertainty. Discipline is a mental state that turns randomness into structure. It allows you to execute your plan no matter what. Now, before we dive deeper into the specifics of how to build this mental state, I want you to take a moment. If you're finding this valuable, share and comment below. Let me know where you're watching from and share your thoughts on your biggest trading challenges. Let's continue and explore how Mark Douglas transformed the concept of trading discipline into something that can truly make you a successful, consistent trader. Mark Douglas' approach to trading discipline was rooted in the idea that emotions are not the enemy. Many traders, especially beginners, try to fight their emotions or control them completely. Mark didn't believe in that. Instead, he recognized that emotions are a natural part of being human. The problem wasn't emotions themselves, but how traders react to those emotions. In his teachings, Mark often stressed that discipline isn't about emotional suppression, it's about emotional management. The real issue arises when emotions control your decisions, when they dictate your actions, and when they cause you to break your own rules. If you let emotions like fear, greed, or hope control your trades, you'll end up making impulsive decisions that go against your plan. This is where most traders lose consistency. The gap between intention and execution that Mark referred to often lies in emotional reactions. Traders might know exactly what to do. They've studied the charts, analyzed the market, and set up their trades. But once they're in the heat of the moment, they get scared, feel like they're missing out, or fear they're losing. In those moments, they override their rules and make decisions based on emotions. This is where discipline comes in. Mark Douglas taught that discipline isn't about forcing yourself to do the right thing. It's about aligning your beliefs with the nature of the market. Once you truly understand that the market is random and uncertain, that losses are inevitable, and that you can't control everything, you stop fighting the market. You stop reacting emotionally, and instead you start responding strategically. What Mark discovered over the years of studying traders and their behavior was that most traders fail because they try to control what's uncontrollable. They try to control outcomes, they try to predict every move, and they try to suppress emotions like fear and greed. But control is an illusion. What's real is the ability to respond to uncertainty with confidence, to follow your plan despite how you feel in the moment. As Mark often said, the market doesn't punish you for being wrong. It punishes you for breaking your rules. This quote captures the essence of his teaching. If you fail to follow your plan, the real punishment isn't the loss of money, it's the loss of self-trust. Self-trust was at the core of Mark Douglas' teaching. He emphasized that when you trust yourself, the market doesn't control you. The real battle isn't with the market, it's with your internal self-doubt, your fear of being wrong, and your need for validation. These are the emotions that undermine consistency and lead traders into poor decision-making. But once you cultivate self-trust, those emotional impulses no longer drive you. You become calm and focused, regardless of the market's volatility. One of the key elements of this process was reframing how you view losses. For most traders, a loss triggers emotional reactions: guilt, frustration, or self-blame. These reactions are fueled by a mistaken belief that being wrong in the market means being wrong as a person. Mark Douglas taught that losses are simply part of the process. They are feedback. They are not an indictment of your skill or your intelligence. They are a natural part of the random distribution of market outcomes. When you reframe a loss as just feedback, the emotional charge attached to it disappears. You begin to see loss as an opportunity to learn and to improve. The successful trader doesn't cry over a loss. They accept it, learn from it, and move on. Mark's point was that the more you understand and embrace this idea, the more you'll detach from emotional reactions and focus on executing your plan. And this emotional detachment isn't about being cold or dispassionate. Rather, it's about being neutral, accepting that the market will give you wins and losses, and that neither defines you as a trader. The goal is to learn how to act with clarity and neutrality, even when things don't go as expected. When you're in this state, you can trade without hesitation and with confidence because you trust the process, not the outcome. Mark Douglas' teachings weren't just theoretical. They were built on the practical reality of how traders operate in a high-pressure environment. If you want to trade with confidence, you need to understand and master your emotions. This emotional mastery is what separates the consistent traders from the ones who continue to struggle. Remember to like, share, and comment below to share how emotions have affected your trading. Let us know where you're watching from, and we'll continue exploring how to master your emotional triggers to become a more disciplined trader. Let's move on and explore how we can align our beliefs with the true nature of the market, as Mark Douglas taught us. Mark Douglas, a pioneer in the field of trading psychology, understood that successful trading is not about fighting the market, but about adapting to it with clarity and discipline. Most traders approach the market with a need to control it, a need to predict what will happen next. The reality is that the market is inherently unpredictable. No matter how much analysis or forecasting you do, no one can predict every single move. The market's randomness is what makes it both challenging and profitable. Douglas taught that the key to success is not trying to predict the future, but learning to respond to the market with confidence, precision, and trust in your process. When Douglas talked about trading psychology, he highlighted the emotional turmoil that traders often face. The anxiety, fear, and uncertainty that arise from the unpredictable nature of the market often lead to poor decisions. The most common mistake traders make is reacting emotionally instead of acting based on a carefully thought-out plan. In a volatile market, traders frequently find themselves second-guessing their moves, breaking their rules, and deviating from their strategies. This emotional reaction is what causes inconsistency. In his book, The Disciplined Trader, Douglas explained that a consistent trader doesn't let emotions take over. Instead, they allow their plan to guide them, without hesitation, without second-guessing, and most importantly, without emotional interference. Emotional interference, such as fear of loss or the desire to be right, clouds judgment and prevents traders from executing their plan with the precision needed to succeed. Douglas further emphasized that emotional control is not about suppressing your feelings, but about managing them. He believed that successful traders understand that their feelings are not the enemy. Fear, excitement, greed, and frustration are natural emotions. However, it's how you respond to these emotions that determines your success. Instead of fighting these emotions, a successful trader acknowledges them and then chooses not to let them influence their actions. One of the key factors in overcoming emotional trading is to realize that you don't need to be emotionally attached to the outcome of a trade. When traders are emotionally attached, whether through fear of losing or the excitement of winning, they lose their ability to execute their plan objectively. Emotion-driven trading leads to impulsive decisions, such as holding on to losing trades too long or chasing after a potential win. By separating your identity and your self-worth from the outcome of any single trade, you can start to see trading in a completely new light. The loss or win doesn't define who you are as a trader, and once you accept that, it becomes much easier to execute your plan without hesitation. It's critical to understand that losses are part of the process. Too many traders view losses as failures. They are not failures, they are simply feedback. Once you adopt this mindset, losses no longer carry the emotional weight they once did. Instead of being discouraged, you become curious. You start asking questions like, what did I learn from this trade? And how can I improve my execution in the future? When you start viewing losses as feedback rather than failures, you take the emotion out of trading and replace it with a scientific approach that allows you to stay disciplined and follow your plan. Mark Douglas also spoke about mental flexibility as an essential part of developing a disciplined mindset. Mental flexibility allows you to adapt to changing market conditions without losing control of your emotional state. It's about maintaining confidence in your process, regardless of what's happening in the market. When a trade moves against you, a mentally flexible trader doesn't panic or second-guess their decisions. Instead, they stick to the plan and move forward, knowing that losses are a part of the overall equation. By embracing this mental flexibility, you develop the resilience to weather any storm the market throws at you. Douglas pointed out that successful traders are consistent not because they have perfect systems, but because they have developed a psychological edge. This edge comes from an unwavering belief in the process, a belief that if they stick to their plan, the results will follow. This mental state of trust and confidence in the system is what differentiates successful traders from those who fail. If you're able to trust your system, even when things don't go your way, you can execute your plan with precision and stay consistent. This consistency is what leads to profitability over time. To truly understand mental flexibility and emotional control, Mark Douglas advocated daily practice. He believed that trading is a skill that can be improved not just through analyzing charts, but through building the right mental framework. The more you practice trading with emotional awareness and discipline, the more natural it becomes. Your responses to the market's movements become automatic, not because you force them, but because you've built a foundation of self-trust. And this trust is what allows you to perform under pressure. As we dive deeper into these principles, remember that discipline is about freedom, not control. It's not about forcing yourself to follow rules. It's about creating an environment in which executing the plan becomes second nature. That's what truly allows you to perform well in the market. If you're finding this valuable, don't forget to subscribe, like, share, and comment below where you're watching from. Let us know your thoughts on discipline in trading and how you manage emotional interference. Now, let's move on to the next section, where we'll explore how understanding the randomness of the market can lead to better trading decisions. As we continue to explore the teachings of Mark Douglas, we move deeper into understanding the randomness of the market and how to embrace it. Many traders fail to acknowledge that market behavior is inherently random. Mark Douglas taught that while we can analyze patterns, the future behavior of the market cannot be predicted with certainty. The market is a random distribution of wins and losses, which means no matter how precise your system is, some trades will be losers. The biggest mistake traders make is trying to predict the outcome of each trade. Predicting outcomes puts unnecessary pressure on a trader's psychology, leading them to make emotional decisions. Mark Douglas emphasized that successful traders don't focus on predicting the future. They focus on managing risk and making decisions based on probability, not certainty. The key to making consistent profits is not predicting the market, but rather identifying patterns or setups that have a probability of success over time. Douglas believed that uncertainty is a part of trading. It is a part of the process that every trader must learn to accept. Once you embrace the inherent randomness of the market, you can begin to make decisions without fear of the unknown. This mindset shift is crucial for building a strong foundation of discipline. When you accept that the market will do what it does, and you don't need to control it, you can focus on executing your plan without hesitation. This leads to the next important lesson: execution without fear. Fear of uncertainty is one of the biggest psychological barriers in trading. The fear of being wrong, losing money, or missing out on a trade leads to poor decision-making. But once you accept that losses are inevitable and part of the journey, that fear begins to fade. The moment you stop fearing losses is the moment you free yourself from the emotional prison that keeps you from trading consistently. Mark Douglas taught that successful traders don't worry about the outcome of any single trade. They are concerned with executing their plan consistently and making sure that over time, their process will yield positive results. One of the most important realizations Douglas had was that trading success is about the process, not the outcome. He always said, "It's not about being right, it's about being consistent." This is where most traders go wrong. They tie their self-worth to being right on every trade, and this leads to a cycle of fear, hesitation, and self-doubt. The truth is, consistency is key. If you can execute your plan consistently over time, even with losses along the way, you will be successful in the long run. It's about building a track record of correct decisions, not perfect predictions. By focusing on your process and executing it without hesitation, you are giving yourself the freedom to perform under any market condition. This mental freedom is what separates professionals from amateurs. The professional trader doesn't panic when the market moves against them. They simply follow the plan, knowing that there will always be another trade and that no single trade defines their career. Douglas also stressed the importance of keeping a balanced perspective. He said that traders need to have a mindset of detachment, which means separating their personal emotions from the market. When you separate yourself emotionally from the outcome of any trade, you create a space where you can execute your plan with objectivity and calmness. This emotional detachment is the key to reducing impulsive decisions and building long-term consistency. If you are enjoying this video, don't forget to like, share, and comment below. Let us know your thoughts on trading mindset and how you manage uncertainty in your trading journey. Let's dive into the final section, where we'll wrap everything up by discussing how to create discipline as a habit and how to align your mindset for long-term success. Now that we've laid the foundation of discipline, emotional control, and the random nature of the market, we can shift our focus to creating a habit of discipline. Mark Douglas always emphasized that discipline is not something you have, it's something you become. He believed that the key to success in trading is to transform discipline from a goal into a habit until it becomes part of who you are as a trader. Building a habit of discipline is like learning to play a musical instrument. You don't start out perfect, but through repetition, focus, and practice, you develop the necessary skills. The same principle applies to trading. To become consistently profitable, you need to cultivate the habit of executing your plan consistently, without hesitation. This is where the mental exercises come into play. Mark Douglas often spoke about the importance of mental rehearsal and visualization in reinforcing the right behavior. Visualization is a powerful technique for creating discipline. Before each trade, take a moment to mentally rehearse the steps you will take. Visualize yourself executing the plan flawlessly, without emotion, without hesitation, and without second-guessing. This mental practice allows you to create a mental blueprint of the behavior you want to reinforce. Over time, this mental rehearsal becomes your reality, and discipline becomes effortless. Another critical habit that Douglas promoted was self-reflection. At the end of each trading day, reflect on how you executed your plan. Ask yourself, did I follow my rules? Was I consistent? This reflection process helps you identify areas of improvement and also reinforces the positive behaviors you want to continue. Reflection is an essential tool for growing as a trader because it helps you stay aligned with your process. Douglas believed that consistent traders have a clear, structured approach to their trading day. They have a daily routine that sets them up for success. This routine includes reflection, mental rehearsal, setting goals, and reinforcing the mindset of trust and detachment. The goal is not to rely on external motivation or willpower. It's to create a structure that naturally supports disciplined behavior. When you make discipline a habit, it stops feeling like a struggle. Instead of forcing yourself to stay disciplined, you begin executing with confidence, free from the mental friction that once made trading feel like a battle. Your confidence grows because you know deep down that you can rely on yourself to execute consistently, no matter the market's behavior. Mark Douglas' teachings showed that discipline is freedom. It's the freedom to act with confidence, knowing that you're following a plan that's been built on a solid mental foundation. Once you make discipline part of who you are, you begin to see the market not as a source of fear or frustration, but as an opportunity to execute your plan and trust the process. As you implement these principles, remember that discipline is a journey, not a destination. It takes time, practice, and patience to develop the habits that lead to consistent success. But once you commit to this process, you'll find that discipline becomes an automatic reflex, guiding your actions and helping you navigate the market with ease. If you found value in this video, don't forget to like, share, and comment below with where you're watching from. Let me know how you're applying discipline in your trading, or if you have any questions or struggles that I can help you with. Make sure to subscribe for more content on mastering the mindset of a successful trader. Until next time, remember, trading is about mastery, not just money.